fears over Jeremy Corbyn, pictured getting into power, Brexit and sterling plummeting led a risk-off mentality among investors last month as money flowed out of equities at a record level and out of sterling corporate bonds. According to Investment Association figures, £1.7 billion left equities in September, marking the fourth consecutive month of outflows. This took the overall net retail outflow from equities to £4.6 billion during Q3, its largest ever quarterly figure. Sterling corporate bonds also suffered heavy losses during September, shedding £917 million. This followed a £309 million loss in August, taking the total net retail outflow over the past 2 months to £1.2 billion. Fairview Investing investment consultant Ben Ursley said, "Two things are at play, risk aversion on the equity front and sterling aversion on the bond front because the past quarter was volatile." From a Brexit point of view, UK funds have lost £15 billion since referendum. UK equity funds alone saw net retail outflows of £676 million in September, with record outflows in Q3 totaling £2.3 billion. The UK all companies sector lost £462.3 million, while UK smaller companies funds shed £61 million during the month. Since the Brexit referendum vote, UK funds have lost almost £15 billion, AJ Bell personal finance analyst Laura Souter noted. She added, the UK all companies sector clocked up almost £500 million of outflows. The sector has seen just 2 months of inflows over the past 2 years, and during that time the FTSE All-Share has risen just 8%. Investors also continued to ditch their investments in smaller UK companies, at a more modest pace than previous months, with £61 million of flows out of small companies' funds in September, perhaps buoyed by the turnaround in the market in recent months. So far in the year to the end of September, the FTSE 250 has performed better than the FTSE 100, gaining by 17% compared to 14%, largely due to a rally in the past 2 months, Willis Owen, head of personal investing Adrian Lowcock, said, "I guess it is largely to be expected from the equity point of view because there's been a lot of concern on global markets and the global economic outlook. So not just Brexit, but also US-China trade relations and economic data has been weaker." Lowcock also said during the quarter there was rotation from growth into value stocks, which is a sign investors were nervous about valuations. The pound strategic bond sector was the best selling in September, drawing net sales of £721 million. This represented a reversal in fortunes for the sector from August, when it was the worst selling with £756 million. Lowcock said, "For a lot of people, the best way to get exposure to bonds is through strategic bond funds because that effectively employs an expert in the bond market, and many really do need that expertise." Beware the Brexit bounce. Global bonds was the third best-selling sector with net sales of £315 million during September, but Ursley warned those investing in local currencies over the risk a Brexit bounce could pose to the direction of sterling. "The risk of getting out of sterling is you do have the Brexit bounce, and then you get caught on the flip side when sterling goes up and all your overseas assets do poorly. So that's the danger of going to the global bond space."